Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Wednesday, the 24th of January, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up, both the macro calendar and the earnings calendar in here. Take a look at the major news wires and the geopolitical, fundamental, macroeconomic events that are shaping financial markets right here, right now. And then we'll have a quick dip into the charts. We'll start off with the calendar. We'll look back before we look forward in here. And on the, where is it? Maybe it actually comes up today. Okay, so we've had a shift here in the PBOC reserve requirement ratio in here. Basically, stimulus coming. It's basically a monetary policy stimulus coming from the PBOC, People's Bank of China, and kind of what we were kind of expecting, a move from China after the significant downturn that we've seen in the stock market so far this year and throughout actually the underperformance that we saw throughout 2023. So there has been a stimulus package there. So seen as a positive, obviously, and we saw hints of that previously 24 hours ago with a package aimed at propping up the stock market. On the data front in here, we've had a mixed bag so far out of Europe. UK, you can see this is the S&P Global / HCOB composite and manufacturing and services flash PMI. Flash, you see the little P at the end in here? That P is for preliminary. You see it's for January. You note from the beginning of the webinar, I said it's the 24th of January. January's not up yet. So what the agency does, S&P Global in this case, when they're collating this data, they get about, I think it's like 80% of the data, and they release it as flash PMI about a week before the end of the month. So they've got most of the data in, and this released as flash PMI, which means the flash PMI can often have a more significant impact because it is actually pretty much where the final PMI comes in when they release these, usually on or very close to the first of the month, depending if it falls on a weekend or not. So we're going to be taking a look at this data and see that, it's kind of mixed, right? So France in here, some beat, some mix. Germany, some beat, some mix. Eurozone, some beat, some mix. The UK beating across the board. And the pound's actually high. I saw this notable movement higher in the pound. So mixed out of Europe so far and beating on the UK. If we fast forward into this afternoon at 9:45 Eastern time, we do get the equivalent data for the US in here. Now, usually the ISM data, the Institute of Supply Management data, which comes out as the same day on the final data as the S&P Global data that we get. Usually the ISM, the Institute of Supply Management data for the US, trumps the S&P Global data. It's a longer series. In fact, I'm pretty sure, I'm not 100% sure, I think the S&P Global data is based upon the original data. It did come from the ISM, the Institute of Supply Management. So they did the original surveys, and then S&P Global did it for the global economy and also for the US. But the ISM, Institute of Supply Management in the US, do not release a flash preliminary number for PMI. So we only have it from S&P Global. So as I say, when we get the final data, which will be usually again around the very beginning, usually on the first of the month, usually like the first and the third of the month, they stagger them, usually with 2 days between the manufacturing and the service sector. But what we see here is obviously the preliminary data from S&P Global. So this is actually important because we don't get the ISM. So all the focus is going to be on that at 9:45. We also get Bank of Canada at 9:45 as well. No rate change expected from the Bank of Canada. I'll share a little article on that. Really, and then the press conference is a little later, 11 o'clock from the Bank of Canada. Probably more focus in here, and actually just a quick note in here. We do have US GDP data coming up later this week, so showcase consumer set to power economy, and the consumers certainly in the headlines last night. Because here's the Bank of Canada. Bank of Canada seen keeping rates on hold as inflation remains above target. If we shift ourselves to the earnings reports now, and if I go and just flick the filter in here, need to log on so that I don't have to keep doing that every day. So if we go back to yesterday, we looked at all the earnings we had before the bell. But remember, we had a couple of the biggies after the bell. So those were both Netflix and Texas Instruments. So you see Texas Instruments kind of mixed in here. A slight miss on the revenue, but a beat on the earnings per share. But Netflix in here, despite the EPS having a slight miss, beat on revenue. But the important thing here was the subscriptions were significantly up. And that's not only seen as a positive for Netflix, so Netflix surging in overnight, late after hours and pre-market trading in here already this morning. I think up over 10%, but we'll come to that shortly. But that's also an indication of the not only the US consumer but the global consumer. A lot of this is them cracking down on the password sharing, the membership sharing. So seeing a bigger growth in memberships, but also that even though they're kind of forcing that, it does show that there's a willingness for the consumer to go out and purchase those memberships. So it is a broader barometer, a reflection of the US and the global consumer, and that is kind of highlighted in here when we have that US GDP data we have coming up later this week, and also the PCE data comes out as well in here. Lower inflation effectively acting as a tax cut. So lower inflation effectively prices are not going down, but they're not going up as much as they were. So effectively, people feel that they're doing better, and so the consumer is still stimulated, particularly in the US. So that was important yesterday, and the Netflix numbers in here pushing the market still higher, having had more of a pause session yesterday. So if we go and take a look at just jump back and look at the charts in here, it was a bit of a pause for both the S&P and a very slight dip and a bounce for the Nasdaq, but then shooting back higher in aftermarket and pre-market trading so far today on the back of that Netflix number, and then hopes now as we move into, and not only Netflix, just while we're here. So Wall Street set for gains as tech earnings impress. So not only Netflix jumps in pre-market trading, we also get today, and we'll come to this now, Netflix, IBM, AT&T are all reporting, and also ASML rallies as the semiconductor equipment maker orders triple. So a tripling of orders for the semiconductor, the super large ASML in here, and I've got another article in here, a couple actually, ASML orders triple in sign of semiconductor industry revival, and then also here tech stocks shine in Europe after blowout update from ASML and SAP as well. So all of this tech doing particularly well, pointing the Nasdaq even higher today, and the stock market looking, and the stock indices looking particularly bullish still. What else do I have for you? Let's just jump back to the earnings calendar and go for today as we've run through the macro calendar. So here we are at the top, Tesla after the bell. So a lot of these are after, you see here the ASML ADR was out, but the ASML, that's the obviously to trade it in the US, but the ADR, but you can in Europe jumping significantly higher with that data this morning. Abbott Labs met EPS and beat on revenue, and then as I say after the bell in here today, Tesla, IBM. Okay, after the close in the post market trading, AT&T already out. So we had a slight miss on the EPS, a very very slight miss, and a beat here on the revenue numbers. So really all focused now on after the bell, Tesla and IBM. So they're going to be important as well going into today. Quick look through 5 things to start your day. We've covered a lot of this already now. So China today just so this was this morning, unleash more money, PBOC in here, cut the reserve requirement ratio for banks by 0.5%. So that's a positive. Tech rally in here, we've already covered that. Netflix, we spoke about that. Don't know if they mentioned got IBM coming up, ASML as well. There's ASML. So ASML doing particularly well. German short, don't really need to worry about that. They are seeing some build up of shorts on the German stock market in here, but not really troubling us. And then there's the China stories. China boosts stimulus by allowing banks to keep smaller reserves. So cutting the reserve ratio is a stimulus on the monetary policy side. China cuts bank reserves to defend market spur growth. This hasn't really, we haven't seen a lot of changes in here. So this is just dipped back slightly. Remember, this pushed up above 50% yesterday. It's hovering around 50% now. So we're now 50-50 on whether we get the first rate cut in March or not. And just running through in here. This actually I haven't read this yet. I want to share this one with you. I don't know how good or bad this is, but we look at our Hawk Dove sheet in here. Well, this is in here. I haven't actually read it yet in here. Oh, I don't know if it's that great an article in here, actually. Oh, the following chart. Oh. Okay, maybe it's worth a look. Okay, so it's just basically, I don't know why this here doesn't seem to be loading. Basically, it's basically a chart of it's charting the dovishness or the hawkishness of the Fed members. Okay, have a look through anyway. I haven't really read it yet, but it just piqued my interest when I saw it when I was running through this morning. I haven't read it myself yet, but maybe it's not as good as I thought it was going to be. But I think there might be some. It's basically who you're going to be watching, right? Who you're going to be watching and how they're shifting in here. So yeah, have a little look at that. What else do I have for you? Let's have a check out the overnights in here. So Hang Seng significantly up, over 3.5% up on that reserve ratio cut by the Bank of China in here overnight. European exchanges also up on both ASML and also on the overnight stimulus from China, and they push up higher in Asian stock indices. You see the DAX and the CAC either side of 1% up. FTSE underperforming probably because the pound's up. The pound is up. So remember, there's an inverse relationship between a currency and the index. So a stronger pound makes it basically harder for the FTSE to rally. Why? Because a stronger pound means that then any corporates within the FTSE 100 who make the majority of their income and revenues from abroad, the strengthening the pound, it goes against them. Okay, so a stronger currency usually weighs on the potential for an index to rally. So that's not helping. That's why the FTSE is not up as much this morning. And if we go and take a look at the overnights in here, we can see after kind of a pause session, Dow was slightly down, the S&P was slightly up, Nasdaq was slightly up yesterday. We've got the Dow up a quarter, S&P's nearly 0.5% up, and the Nasdaq nearly 0.75% up. So you can see in here, S&P, I've stayed bullish in here the last few days. I can't, a chart like that from a technical analyst, you can't do anything with it but other than be bullish. My only concerns, we're getting a little bit overbought. We were far more overbought back here. So has it got more to go at the moment? I think it probably has. Nasdaq's similar in here. Nasdaq's more overbought, is getting into, as overbought as we were back here when we took this bit of a pause. So a little bit more concerned about the Nasdaq in here leading the way higher. But, with all the data we've got coming out, there's no reason the Nasdaq can't go higher today, this week, and potentially through next week when we have even more of the big tech earnings coming through next week. You've got the likes of, I think, next week, I think we move on to, well, let's go take a look. I think we've got next week, we jump into the likes of your Microsoft, Alphabet, that's Google, and I should think we've got Apple and Amazon. Yeah, so we've got all those coming next week. So next week's going to be really the big week of whether this whole rally that we've been seeing can extend still further by the Nasdaq with those really mega techs coming out next week, and we'll get a clue towards that with the data we have coming out later today from Tesla and IBM. All right, guys, I'm going to wrap it up there. Looking bullish again going into the day. Have a great trading day. Take care, stay safe, and I'll be back with you with another bull versus bear webinar tomorrow. Bye.